Good morning, everyone. Day 3 of the conference. Thanks for sticking with us. A couple of observations on the conference so far. I think Ballard has the best merchandise on offer out there on the booth. We've got socks. The socks have been extremely popular. So for those who missed out on the socks, feel free to get in contact and we'll mail some more out. My second observation is I think we're probably presentation number 90 out of 100-odd presentations over the 3 days. So we decided to channel Tony Abbott, and as far as I can tell, Tony Abbott won an election a number of years ago on 3 catch cries: stop the boats, repeal the tax, stop the big new tax on everything. So in the spirit of Tony Abbott, that's our 3. We're growing. We've got visibility over a 6-year mine life. We're targeting an 8 to 10-year mine life. We're fully permitted, and importantly, we're fully funded to an FID decision. I'll just start with our board, ably led by Simon Lill, our chairman. Simon was with De Grey for the full 12-year journey up until their $6 billion takeover by Northern Star. Myself and Tim Manners, the 2 exec directors. Tim and I both come from operational backgrounds. Tim was CFO for Ramilius for 7 years during a very formative period of growth for that company. I'm a mining engineer. I've travelled a well-trodden path through the ops. We're not spivs, we're operators, and we're here to take this project forward through development and ultimately into production. James Crozer. James is the Delta MD. He spoke earlier this week. I'll talk to Delta's shareholding in a moment. And Stuart Matthews. Stuart, until he retired a couple of years ago, was Executive Vice President of Goldfields Australasia. He's used to looking at big camp scale projects, big exploration budget, and he brings a different lens to a company our size. Both Todd and Lauren are here in Sydney as well. They've been on the booth the last few days. And just the corporate structure, 450 million shares on issue. We've got a market cap of circa 300 million, and importantly, we've got $76 million in the bank, and that will see us through to a FID. For those not familiar with Ballard's story, I think it was this conference last year where Delta or James Crozer announced Delta's intention to demerge their gold into Ballard. So we subsequently, that occurred, and there was an IPO, and Ballard's been trading on the ASX since mid-July last year. So as part of that demerger, Delta retains 34% of the register. A couple of Delta's major shareholders, namely MinRes and Hancock, through their in-specie distribution, came out of substantial shareholders of Ballard in their own right. So we've got Hancock there with 5.9%, and MinRes are just sitting there just below 5%. I'll talk to REN in a moment with just under 10% of the register. They're a neighbouring operating mine, privately owned, and I'll explain a bit more about that in a moment. This is where we are, a couple of hours north of Kalgoorlie. We've got a bitumen road to within 20 kilometres of the mine gate, surrounded by some well-known household names within 100 kilometres of our operation. Our plan for this year is to put $50 million into the ground. We're embarking on a 220,000 metre drilling program. As I said, we've got visibility over a 6-year mine life. We're targeting 8 to 10. And I think what's interesting there is you compare Ballard with our 300 market cap and our $50 million exploration expenditure compared to some of the other names, Volt and Genesis. We've got an exploration expenditure that rivals some of the majors. Orabanda to the south of us, they're investing $75 million this year in exploration. So they're the only one in the region who has a larger exploration expenditure than us. We think Orabanda, they're a good analogue for what we've got planned Same greenstone belt, same geology, same predominant underground mining method, and then coming up to just to the south of us is Oren. So Oren is a privately owned mine. They've got a 2.5 million tonne per annum processing plant. They're producing circa 70 to 80,000 ounces per annum. They're 6 kilometres away. We have a good relationship with Oren. We share an aerodrome. We give them water. There's ongoing dialogue in the background. October last year, we gave them 10% of the register. We did that placement at a premium, and that was really a demonstration of intent from both parties that there's willingness to consider, some sort of tie-up. What we like to talk about is our Plan A. Our Plan A is we are looking for a 100,000 ounce per annum producer over an 8 to 10 year period. So whether it's a potential merger with Oren or indeed any other M&A within the region, it has to better our Plan A. Our various deposits on the right, Baldock does all the heavy lifting for the project, just over 1 million ounces at Baldock, and then we've got a number of satellite open pits that we're busy drilling now. Baldock hosts 1 million ounces at 3.5. Of that 1 million ounces, 670,000 ounces is in the indicated category, 670,000 ounces at 3.7. We expect that to convert to a 400,000 to 500,000 ounce reserve. The fully permitted status sets us apart from the rest of our peer group, we've got in excess of 53 regional exploration targets, which we're just systematically working our way through. So this is Baldock. As I said, Baldock does all the heavy lifting for the project. Out of the use of funds from the IPO last year, we embarked on an 86,000 metre infill drilling program at Baldock. That was deliberate. We drilled Baldock down to a depth of 350 metres, and as I said, that converted to a 670,000 ounce indicated resource, and we expect of that 400,000 to 500,000 ounces to be in the reserve category once we complete the geotech and met studies, the key modifying factors that you need to declare an ore reserve. What we're doing right now, we've got 3 diamond rigs sitting on top of Baldock, and we're drilling the next, what we call panel 1 at Baldock, which is a 350 metres to 750 metres depth. We know these orogenic gold deposits plumb deep. We're confident that the ore body will continue, and we expect that next panel to add anywhere from 400,000 to 800,000 ounces. You see the bar chart on the left, which shows the ounces per vertical metre. The old rule of thumb for an underground mine under a very different gold price was anything north of 1,000 ounces per vertical metre makes for a profitable underground mine. You can see, 2,200 ounces per vertical metre in that top 350 metres where we've drilled, and so we're reasonably confident we're putting the holes into the ground that we'll have the success, and that resource will continue to grow. This is just an oblique view of Baldock, showing Oren's operations 5 kilometres to the south. We're confident the resource extends at depth, not just because it's an orogenic shear-hosted gold deposits, but we've got 2 good analogues to the north and the south of us. Agnew to the north, it's a 10 million ounce camp. They're mining at over 1,000 metres deep, and as I touched on, Orabanda, their flagship underground operation, Riverina, is 80 kilometres to the south of us, and they're tagging mineralisation at 1,000 metres depth as well. Same greenstone belt, same geology. Mount Ida, or our Mount Ida, is just and I don't pretend that we're Robinson Crusoe, it's just another example of a potential camp scale project that's never been owned by a major, and with our $50 million exploration budget this year, we're pitting areas back and having a crack. This is the border project. So we've got 26 kilometres of prospective greenstone belt that wraps around a granite unit. The gold was there first. The granite intruded through the gold, and as the granite cooled, the pegmatites which host the lithium intruded out through the gold. That's why there's both lithium and gold occurrence. We are currently targeting the existing satellite resources where we already have a JORC resource. So we're looking to grow those resources first, and then we'll step out and target some of the brownfields exploration targets that we've identified. So this is the Ballard fault. This is on the eastern side of the granite of that slide I just showed you. We've put out a number of drilling results of those satellite prospects in the last month or so. The last one was, I think, last week. We put out an announcement on what you see on the screen on the Ballard fault. And we are deliberately targeting these satellite, excuse me, regional prospects as what I call the incremental stocking fillers. So we see, as I said, our top-down goal is 100,000 ounces per annum production over an 8 to 10 year mine life. Baldock underground will do 80,000 ounces per annum. We've studied Baldock to death. The only reason it's not in the market is because we're still waiting on the geotech and met studies, those key modifying factors I mentioned. And then with the open pits, well, the satellite projects as these open pit stocking fillers, we expect a 30 to 40,000 ounce contribution from those pits. So 80,000 ounces per annum out of Baldock, another 30 to 40,000 ounces out of the satellite open pits, 110,000 ounces mined, 100,000 ounces recovered. We're not sending space shuttles to the moon. We're confident the ore body's there. We've got 6 drill rigs operating. We've got the money in the bank, and we're confident as we roll through this calendar year is we'll achieve those top-down goals. This, everything I've just said in a timeline, starting at the bottom with Baldock, does all the heavy lifting. We put out a MRE update for Baldock in Feb. We're working through the geotech and met now, and we expect to come out with a maiden ore reserve for Baldock probably in July or August. The drilling we're doing now, the 6 rigs spinning, both the combination of extensional drilling at Baldock and the regional satellite prospects, we're targeting 1.5 million ounces. That equates to an 8-year mine life. We think that's enough to move forward with conventional project finance. We've recently appointed a debt advisor, and so once we have that 1.5, that'll roll through into a feasibility study and ultimately FID, and we expect that to occur in the first half of next year. Fully permitted, full stop, not refer, footnote 1. This is a key differentiator between us and the rest of the developers. Granted mining leases, no native title, approved mining proposal, mine closure plan. We have a works approval, which is the instrument you need to build a processing plant for up to a 2 million tonne per annum plant, native veg clearing permit, and water. We've got a water licence for 3.7 gigs. I put water right up there in top 5 of key risks for a project. So importantly, we've secured the water for the project as well. That's the slide deck. This presentation's on the website. We're obviously here for the rest of today. If anyone's got any queries, feel free to drop me an email. I like to think that we're available and contactable. We use Investor Hub, so you can log onto the Ballard website and log a query on Investor Hub, and that will be answered by, well, usually me. More than happy to answer any queries you might have. Thanks very much, everyone. Thanks, Chrissy.